Welcome to the EntrePastors Podcast on YouTube. This is a show that helps pastors think, act, and thrive as prosperous entrepreneurs. Well, hi there. Welcome to the EntrePastors Podcast on YouTube. My name is Jon Sanders. I'm one of the co-hosts and co-founders of EntrePastors, and I'm thrilled that you're tuning in this week for our podcast. Listen, I got a question for you. Are you someone that is has a negative response to taxes? Normally, when people hear the word taxes come up in conversation, that's not something we get excited about and celebrate. We might actually change that up a little bit for you with today's guest. We're going to be hearing from Chad Brown, who is an accountant who specializes in serving small businesses. You know, at EntrePastors, we encourage pastors to be out in the marketplace launching businesses of their own. And here's what a lot of people do not understand who are not business owners. There are tremendous tax advantages for people who own and operate businesses. The tax code in the United States of America is written by people who own businesses, and they create tax advantages for themselves. And if you want to win at that game, get in the game of having a business and follow the tax code and take advantages legally of all of the ways to save money as a business owner. So the title of this week's episode is How Owning a Business Can Save You Thousands. And you're going to hear a really lively conversation between myself and my co-host Les Hughes and our guest Chad Brown about how taxes can actually be a fun thing when you own and operate a business, how it can be an advantage to you. And so if you are new to this conversation, if you're new to the idea of owning a business, this is probably going to be a very eye-opening thing for you, and we're excited to share this conversation with you. So without any further ado, check out our conversation with Chad Brown. Here we go. Well, Chad, it is my pleasure to welcome you to the EntrePastors Podcast, my friend. Welcome to the show.
What is up, guys? I am happy to be here. I'm excited to talk about something that typically scares people to death or bores them to death, and that's taxes. But you know what? Taxes can be exciting. It can be fun if we're using it to keep more money in our pocket and use that money to build our dream life or make a difference or have impact. So, man, I'm excited to share some tax tips and things with you guys today on how we can leverage all the loopholes out there to make it a win for your audience.
Well, we love it. And then, go ahead, Les, were you going to say something?
I was going to say, he's speaking our love language. I may cry. I felt the chill.
I love it.
I'm going to say, talk dirty to me, but that's a different podcast for a different time. So,
No,
anyway.
he did not say that.
I did say that. Sometimes I say provocative things and make Les blush. But, Chad, that's exactly what we want to talk about, man. And I want to do this at a very basic level because some in our audience are probably well familiar with some of the things you're going to share, but many are not. And for many of our audience, these are guys and gals that are either just getting started in the marketplace, launching a business. They've been in more of a W-2 world. Pastors are kind of a unique breed from a tax standpoint, probably from other standpoints as well, but taxes are kind of interesting for pastors. But in large part, most of our audience thinks like W-2 employees, and maybe they're not aware of the advantages of, from a tax standpoint, of owning a business. And so I didn't come with just a ton of questions because I have a feeling once I say go, Chad, you're just going to go off, because I was in a meeting a while back where you were just sharing amazing advice, and I thought we've got to share this with our community. And so that's the big conversation that I want to have with you is, you know, what are the advantages for people who own businesses in terms of a tax standpoint? How do we, you know, avoid paying taxes legally that we do not, you know, that we can get away from paying and put more money in our pockets? So big, broad question. I'll let you take it in any direction you want, but what say you?
All right, guys, let's do this thing. All right, so here's the way I like to kick these things off, because so many people approach taxes with this fear-based mentality. I mean, people are scared. They don't know what to do. They don't know what they don't know. They're worried they may go to jail if they do something wrong. And guess what? Everybody's that way. I have business owners making millions of dollars that feel the same way. We're not taught this kind of stuff. You don't learn it in high school. You don't learn it in college. Your parents don't know it, so they don't teach it to you. So pretty much there's about 35 million business owners and entrepreneurs and another 100 million employees out there floating around that nobody knows anything about taxes. So what I always like to start out is just because you don't know anything about taxes shouldn't deter you from getting into business or entrepreneurship or doing something, because it's really nothing to worry about or fear. And there's not a whole lot of compliance. What you have to understand is the IRS uses fear and fear marketing to keep people in compliance. So the IRS enforces tax law. They do not write tax law. Tax law is written by Congress. And guess what Congress is made up of? Honestly, a bunch of old rich dudes that own businesses in real estate, and they don't like to pay taxes either. So there's all these loopholes and all these easy ways to be in business and be an entrepreneur and have a side gig without hardly doing anything and saving thousands, if not tens of thousands of dollars in taxes. Well, the IRS, they have right now about 50,000 employees that has to monitor something to the tune of 100 million tax returns a year. They're understaffed. They're running software from 2002. And so they can't monitor or keep everybody in compliance or do audits. They truly use like fear marketing to make you scared of taxes, to like bring you into like compliance so you don't write stuff off you shouldn't. And so we've got to overcome that mindset. We got to say, hey, how can I make taxes be a win for me? How can I use taxes to help my situation, playing inside the rules without being aggressive, without crossing the line, without throwing up any red flags? And that is what we're going to talk about today. And it's super, super simple. The tax code is built and written by Congress to benefit automatically business owners and real estate investors. And it also is built to incentivize business owners, because small businesses and entrepreneurs is the backbone of our economy. That's where all our jobs come from. That's where all the transactions come from. That's where all the sales tax money and other taxes come in, and payroll taxes that's paying everything anyway. And so there's all these loopholes and deductions you can get into and make money. And so that's why I get so passionate and so excited when I talk about this, is I'm like, there's so many ways you can make money outside of just your W-2 job at the church or you know, your job as a pastor, with influencers, with merchandise, with Shopify, with products, with courses, coaching, consulting. The list goes on and on and on. There's, for a pastor or anybody in ministry, there's about 15 or 20 different avenues right now to have a side gig, not even counting all the other stuff like pressure washing on the weekends or painting or all the other thousands of things you could do to make a little extra money. But way more valuable than even making extra money is the tax benefit. So you nailed it, John, there for a second. Y'all have a unique tax situation in your industry. It's really different than anything else out there. And it's way overly complicated for some reason. There's most ministers have a W-2, but they don't have Social Security and Medicare tax come out. That has to square up on the tax return. There's a housing allowance, which has some special treatment. You can actually write more stuff off there, but you still have self-employment tax, not income tax. Then there's a special exemption if you claim something about public insurance. And y'all got some funky stuff going on anyway, which honestly helps you in a little bit, but only if you really know what you're doing when you prepare your taxes. But where you can really win and really move the needle is on the side of an entrepreneur or a business component of anything you're doing as a side gig, anything your spouse is doing. And what most people don't realize, that creates a windfall of tax deduction, and you can use those deductions to offset your W-2 income from ministry or the church or wherever it may be. So you can go over here and start a business and make money, and oftentimes offset 100% of your taxes from your W-2 income. And so you get any withholding back, or you break even, or if you got kids, you get big refunds. So that's what I love doing. And here's the way you can start doing that. You really don't have to do anything except start a business or have a business. You don't have to, in the beginning, you don't have to have an LLC. You don't have to have a business license to operate. You just have to start trying to generate some sort of business purpose or pursuit of profit. Don't ever have to be profitable. Don't have to be profitable in the first year. But if you just start a business, you automatically get to write off anything you're trying to do to start that business. So let's say it's starting a podcast for business purposes, or starting some courses or some coaching or consulting. You start writing off home internet, start writing off computers, you start writing off podcast gear, cell phones, different things you're spending dues, subscriptions, editing stuff, anything you're subscribed to or coaching or courses you're paying for to get better at what you do at your craft or get better as a business owner. All those things start becoming write-offs. And then we also start picking up mileage or vehicle or other different things that kind of mix that personal expense and business expense. And all of a sudden, we have a side gig, we have a business we're trying to grow. We're in the early stages. We're learning business. We're learning different ways to do things and how to make money on the side, but we're also writing a ton of things off on taxes. A lot of things we're already spending anyway, and we're picking up what I like to call ghost deductions, which are things that don't even cost you any money, like mileage or depreciation or square footage for a home office inside of your house. And so from a business perspective and from a tax perspective, you don't have to register on the front end. You don't have to do anything. You just start spending money and tracking it. And then you have somebody that's knowledgeable in business taxes, and they use that as part of your personal return to offset your W-2 income or your spouse's income or whatever else is going on for you financially on the tax return. And it doesn't take very long for that mindset of a business owner entrepreneur to see, wow, I'm winning like 3 or 4 different ways in this venture and in this side gig. And then it just you start to get excited. You start to learn more, ask more questions, and it just becomes a snowball effect. Now, once you get things operational and once you start overcoming your expenses and start showing a profit, that's when we want to set up things that you hear most commonly about, like LLCs or S Corps. Those things, they help you save on taxes when you get profitable. They help you pay less taxes and less percentage taxes. But in the beginning, you don't have to do any of that. You can start any business you want, and your only compliance is you track your income and expenses inside of that entrepreneur venture, and then you report it on your personal tax return. And if it grows, if it turns out successful, if it starts making money, then you want to convert to an LLC S Corp, or if you already have a side gig or business out there, or your wife or spouse or husband does, then once it's profitable, you convert that to an LLC S Corp, you get even more tax write-offs, and you pay 15.3% less taxes than you do on your other types of income. And then what typically happens is you have extra money, extra cash flow. We leverage that into rental property or investments that, guess what, save you even more taxes. And so it is not uncommon to go down a road with a side hustle or an entrepreneur just starting out on a side gig to start offsetting all of their taxes on their minister pay or W-2 pay or their spouse's pay, or to start offsetting all their business taxes, or to start having rental income and offsetting that. And then you're building multiple cash flow assets, building passive income. You're not paying any taxes. It puts more money in your pocket. You're able to have more time, more freedom, live your dream life, have more of an impact, because I truly believe while we can make a big difference with our time, we can make a bigger difference with our money, and especially our money and our time. So if you can find a way to free up money and time through entrepreneurship, business, or rental real estate, that is the answer, I believe, to making a huge difference and living your dream life. Now, guys, we'll go in whatever detail or direction you want to go from there, but that is kind of a crash course in how this works, how to get started, and what you honestly just do and don't need to do from the beginning.
Yeah. We often encourage our audience to get pretty quickly move to that place of setting up an LLC or some kind of formal business. But what you're saying is just get started. Would you recommend, though, that they at least separate their finances into different accounts, like to set up a separate checking account? Or are you like, no, it doesn't even matter. Like it can all be coming out of one primary checking account. We're just going to start categorizing it differently. What would your advice be to how do I keep all that separate of what's business expenses that used to just be my normal daily expenses?
Yeah, great question. And I'll say, backing up for a second, it is a lot nicer, and you're a lot more legitimate, and it's a lot better to do an LLC or an LLC S Corp from the start. But that's such a deterrent for most people. It seems scary. It seems complicated. You hear corporation, or it's going to cost you $1,000 or whatever it may be. that I see that as enough deterrent for a lot of people that's kind of hesitant anyway to use that as a reason not to start. And that's why I like to take that off the table and say, you know what, in a perfect world, you would have that from the beginning for liability protection, for tax purposes, but you don't have to. We can always pick that up anytime down the road. Just start trying. And you may be in your third phase of whatever business you want to be in before that comes into fruition. But regardless of that, I really like to have separate checking accounts. You are not required to do so. The IRS doesn't care. It's just a lot harder to track things, and it becomes a lot more cumbersome for the business owner or the entrepreneur if it's all mixed in with their personal stuff. If I've got to sit down once a month and look at my bank statement, separate business from personal, and it's muddied in with 400 transactions to the grocery store and CVS and gas station and my kids' baseball, or it's just a lot harder. Whereas if I have two separate accounts and two separate debit cards, doesn't matter. They could both be in the personal name, or it could be a business named account and a personal account. But having it separate just makes it a lot easier for me to track it, or for business owners to track it. It's all in one place. You know where it's at. It does create a little better liability situation if you're in a place where a business, like if you're a roofer, whole different ball game. I'm like, hey, you need to have the LLC from the start. You need a separate checking account. We need to separate that. Somebody falls off a roof and breaks their neck. That mingled together with your personal stuff is not good. But for most businesses, there's not, a whole lot of liability there. But in a perfect world, you would keep two different checking accounts because it just makes it easier on you as a business owner. You don't have to. What the IRS goes by is business purpose. Same thing with a vehicle. You may own it in your personal name. You may pay it out of your personal account. It may be insured, in your personal name. But if it's a business purpose vehicle or a business use vehicle, it's a tax deduction. It can go on your business return, regardless of how it's titled or paid. That's the way a lot of things work in business and taxes. Is it doesn't have to come out of a certain account or be in a certain name. Now, there's some reasons to do that are nicer, but it's not a necessity. And typically the question I get after that is, all right, what does tracking look like? How do I track my expenses? And that's where it's personal preference. You can track it in whatever works for you. Most of the time when people are starting out, I recommend just using a Google spreadsheet or an Excel spreadsheet and just have your categories of expenses and your income. And I can share one with you if you guys want to reach out to me, or, reach out and say, hey, will you shoot me a tracking spreadsheet? That's a free, easy way to start. Usually the next phase, most people graduate up to some sort of app or to QuickBooks Online, and it does the exact same thing. It's just tracking income and expenses and categories. It's just on a more professional level. And then you get into things where you can track who owes you money, and you can invoice clients online and get paid electronically. And so there's some really cool features as you graduate up, but you don't have to do that from the start, or you don't have to know or learn all that stuff right away.
Yeah, that's good. And I think what you're doing is just giving that invitation to get started. And that's so much of the coaching we do is, man, just get started, taking that first step. The next steps become more clear after that. And I won't go deep into the details, but that's part of my story as well. Years ago, I had a podcast and have been podcasting ever since. But when I finally set up a separate checking account and called it my podcast account, and is like, now this thing needs to at least pay the bills for all of what's coming out of here. Like something spiritual flipped inside of me. There was a switch that came on that said, you have a business, man. And like, that's part of my journey behind, my part of the EntrePastors platform. It's like, that's why we encourage pastors, like, think of yourself as a business person. You own and operate a business. So I love that invitation, man, just to get started. We can formalize the things as we take more steps down the road, but just get going. Here's a question. This may be fun, and you can take this in any direction you want, but I think I'm going to ask you this. Like, what do people not know? The average non-business owner, what are some fun facts about taxes? Ways, like practical ways that they can save money on their taxes that they have no clue even exist. Like, I'll give an example and then you can run with it. Like, yep. You had mentioned earlier, like, writing off a percentage of your home because your office for your business is there, or things you can do with your kids. You've got kids at your disposal. Like, how can that be a benefit from a tax standpoint? So you can run with that in any direction. But what are some things that you deal with this every day? But the average person that's not in business, they have no clue some of these tax breaks, legal loopholes that have been written by wealthy people who don't want to pay taxes, and they enjoy them every day. What do we not know that we should know as potential business owners?
So I will start with the worst thing about not knowing anything and not doing anything. The absolute worst tax situation you can be in is to get your W-2 and anything else you get in the mail and hand it to somebody and say, here's my taxes, and you get an end result. You may even be getting a refund, but it's because all the money you paid in during the year. It's because of all the credits out there. But not doing anything or not knowing anything is truly the worst way to file. For most of you out there who aren't doing anything, who just turns in a W-2 and gets a tax return back, you're probably, when you net it all out, Social Security, Medicare, state taxes, federal taxes, you're probably in the 30 to 35% tax situation. You don't realize that because for a lot of people and a lot of people's spouses, it's coming out every 2 weeks or it's coming out of their check. And so they're not seeing a massive tax bill, but that doesn't mean you're not paying a ton of taxes. You're making 70 grand, paying $25,000 a year in taxes. Most people don't know that or realize that and thinks, oh, it's great. I don't have to write a big check every year, so I'm not paying a whole lot of taxes. Not true. What you need to know is not doing anything is the worst thing you can do. You want to be able to control your taxes. As a W-2 or as a minister, you really, outside of housing stuff and housing allowance, you can't write anything off. There's a special little mileage thing you guys have and female spouses out there have, female ministers out there have. But outside of that, you can't write anything else off hardly. But if you just simply get into anything entrepreneurial, rental real estate or business, then not only can you start writing so much more off, you can start writing off things you're already spending. And that's where everybody out there is probably spending about 10 to 15 grand a year that now qualifies as a tax write-off, which means at a 30-something% tax rate, that's a $5,000 swing in your business. So you're going to make $5,000 of being a business owner back, even if you don't do anything, even if you don't ever make any money. So your business venture is somewhat producing money for you through tax benefit already. And then you start picking up the loopholes I love. These are the things out there nobody knows about. Paying your kids through your business. You can pay your kids up to $13,000 a year through your business or entrepreneur setup in an LLC or anything like that you have in place. The business gets to write it off. And the standard deduction for kids or for anybody is 13 grand. If they make less than 13 grand, they don't even have to file a return and they pay zero taxes. So my clients as business owners, they're paying their kids 13 grand. They're writing it off as a business expense. Their kids are getting it, or it's going into a college fund, or it's going to pay for nannies or daycare or school or Disney World, whatever the kids want to do with the money. Kids don't even have to know about it. It could just be saved for the future, car fund, whatever it may be. And it is a huge swing in taxes. If you have 3 kids, then all of a sudden you've got $39,000 of tax write-off that you're writing off on your business side or your LLC side. Your kids are where it's going. It's not being taxed over here. And again, at a 30% tax situation, that is around a $12,000 difference on your tax return. So now all of a sudden, we've saved $5,000 in taxes on stuff we were spending anyway. We just implemented paying the kids, which are spending probably that on them anyway for most people. So now we have a $17,000 difference in the bottom line of our tax return already. And then the next step from there is what I love. Most of us love to travel. We love to go cool places. We love to check stuff out. There's a way, once you have your business set up, you can loop in a once a year corporate retreat. And if you get creative with it, then your corporate retreat can be your vacation or your family travel. So now all of a sudden we're writing off awesome trips. It may be to go somewhere cool in the United States. It may be Bahamas. It may be Europe. But finding ways to do what you want to do and live the life you want to live, or go places for missionary work or all sorts of different things that you want to check out, and be able to write that off as a business corporate retreat deduction. That means I can now write off my flights, my hotel, my meals, my Ubers, my taxis, all the things that involve travel expenses with doing this once a year. And then from there, we come back to the home side, writing off the home office, writing off things like home internet, computers, and even stretching into what's called the Augusta rule, which originated here in Georgia with the masters in Augusta. Your business being able to rent out your house. There's a special loophole out there that says you can rent your personal house out up to 13 days a year and pay zero taxes on what you get as rental income. Now, that started because of the masters in Augusta. Back to Congress writing tax law, a bunch of rich congressmen own houses in Augusta. Well, corporations come down for the masters and they pay $70,000 or $80,000 a week to rent these houses during Masters Week. These guys got tired of paying taxes on that. So they made a special loophole they tucked in there to said, you know what? If you rent your house out less than 13 days a year, no matter what you make on it, 70, 80 grand, it's tax free. So we started using that in college towns like here in Athens. We typically have 6 home football games a year. People will Airbnb their house for 12 nights a year, those 6 weekend home games. They'll collect 20, 25 grand in rental income, pay zero taxes on it. And then they opened up a loophole on top of that said, oh, it gets even better. Your business can rent your house out. Your business can now, even if you're a single member business, you can have quarterly retreats at your house. You can have Christmas parties at your house. You can invite potential clients over. You can have planning sessions at your house. You can now have your business rent your house out through the Augusta rule, write off the rent the business is paying you and not claim it on the personal side. It's the equivalent of moving money from my left pocket to my right pocket and getting able to write it off on my taxes. So those are the most awesome loophole, creative things that most people don't know you can take advantage of. And there's so many like that, guys, once you get into the business side of taxes. It's truly built for you to win.
Yeah.
Chad, for somebody that's just now, say they're just starting their LLC, they even have an S corp, let's say, or either one. So they're thinking, man, that'd be great if I was generating enough income in my business to take that vacation or to buy that new computer or fill in the blank. So speak to that person. And what the specific question is, do you have to necessarily be paying all those things as business expenses, operation expenses out of your business so that you got to have revenue in, or are there ways to spend that money out of your personal income, like W-2 income, and still reap the benefits on your taxes, even though you've got them separated into a separate entity? Does that make sense?
It does. That is a fantastic question. And you are 100% right. You do not have to have the business revenue or the business income to be able to spend this money and write this stuff off. Most businesses lose money for the first 2 years. Some businesses like Uber lose $9 billion before they ever get profitable. So what happens with business owners, entrepreneurs, especially the first couple of years, is they're taking their W-2 income or savings and they're putting it in the business account to spend it. So the business might not make any money for the first year. You still get to write all this stuff off. You're just moving money over into the business account. And then when it makes money, you move it back. So the biggest thing to understand from an entrepreneur or a business owner, whether you're set up as an LLC or S corp, or whether you just have a side gig and it's just under your name or social, the movement of money is not a taxable item. I can put money into my business account whenever I want to. I can take it out whenever I want to. All that matters is deductions. What did my business make? What did I write off as deductions? This bottom line figure is all the IRS cares about. I could have lost 20 grand in my business. That means I had to personally put 20 grand in to be able to spend this money. That's coming back to me, offsetting my W-2 income, saving me $7,000, $8,000 in taxes, and I'm growing my business to be profitable later. Or if my business made 100 grand, let's say it took off and exploded, and I brought in 150 and I had 50 in expenses and write-offs, and I had $100,000 profit. Well, whether that money is still in my business account or still in this account, or I've took it all out personally, I'm still taxed on the same thing. So you can always put money into your business to pay for things to write off, you can always take money out of your business. It's the same as moving money around between a personal checking and a savings account. The movement of money is not a taxable item or anything the IRS cares about. And so you really have the freedom, even on a tiny level. You said, man, Chad, I'm having a hard time getting somebody to pressure wash the church, and they just nobody here that'll do it or do it for a fair rate. And so I'm going to go buy a $500 pressure washer and some squeegees and some window washing stuff. And the church is going to pay me $1,000 a quarter to pressure wash and clean windows. And I'm going to get 4 or 5 other churches. And so you could start in that small pressure washing format. You may spend $2 or $3 grand getting set up before you ever make any money. And that's money you personally put in to do that. And you're going to get a tax benefit and tax write-off for that. Plus, you're also going to get to write off, well, I got to use my cell phone because that's how people call me. So now I get to write off my cell phone. Well, man, I got to have my truck to haul my pressure washer around. So now I get to write off my truck that I already own and I'm already paying for. And now my truck insurance. So now all of a sudden, there was a small need for the church to be pressure washed and the windows to be cleaned. Well, now you may be doing it, making 5 or 10 grand a year in extra income through a few churches. And you may be writing off $20,000 to $25,000 a year in tax deduction and write-off, which is offsetting your other income, saving you even more money in your pocket. And that's how fast and easy it can happen. It doesn't take you having to go spend $30,000. You can truly spend a couple of $1,000s and start seeing windfalls of difference on the tax side.
Yeah, I have a question on paying your kids, going back to that part of it. Is there a cutoff for that, or an age limit, or do they have to be living in the house for that to apply, or can this be for a lifetime that you can pay your kids at that?
Yeah, and I knew you got John's attention with that. Did you see? Man, he perked up big time.
Listen, I know my audience here, and I know whenever I'm talking to pastors and anybody in ministry, most of y'all have 5 or 7 kids, and so I can't imagine all the money I see going out the door now when we talk about paying kids.
Exactly.
So theoretically, there is no age limit, or there is no, like, they have to live with you rules. It is a hard and fast income rule. If they make less than $13,000, regardless of age, regardless of situation, actually doesn't even have to be your kids. It could be your grandkids. It could be your neighbor's kids. Anybody making less than 13 grand can be paid up to that, not have to file a return, and not be taxed. So let's say your kid works as a lifeguard for the summer and makes $3 grand. Well, now you can only pay him 10 grand out of your business. You got to keep them under that $13,000 standard deduction. That's the key behind it all.
Gotcha. Okay. That's helpful.
John.
Yeah.
Chad needs to know I have 12 grandkids and 2 on the way, my man.
Man, congratulations. Unless I don't know what you do on the side, but I don't know that you can make enough money to pay that many $13,000 a year.
Yeah, I love that, man.
Yeah, man.
Well,
you ought to never pay taxes again, my man.
For real.
Yeah. Well, I wish I would have known that many, many years ago. I'm kind of in the empty nest. Our youngest just moved out. That's why I asked the question. I'm like, man, this would have been good information like many years ago. But here's one more real practical thing. So someone who has a, 2-year-old toddler in the house going, I can't pay my kid. How in the world do I pay my kid? He can't do anything for my business except drool on my desk. So how do I pay that kid in the eyes of the IRS that's legitimate?
Yeah. So first of all, one thing to understand with the loopholes is they're built for you to jump through. And so they typically have a pretty wide net of generous treatment or behavior they allow. So it most always passes audits. What most people do for any kids under the age of probably 7 that can't really help you clean up your office or can't help do a lot of work, they use them for quote unquote modeling. They use them for maybe in their social media. They use them for a billboard. They use them in a magazine. Like, I have a lot of realtors that use their kids in photo shoots to show, hey, I'm a family realtor. I help families find houses, or, I'm more trustworthy because I have a small kid or a family. You can pay your kid modeling or pay your kid for advertising to be in certain pictures or advertising or on your social media, on a Christmas card you send to clients, those kind of things. So you start being able to get creative, even with toddlers.
Yeah. Well, very good. And anymore, by the time they're like 7, they can run your social media for you and all of that. So
That's right.
Well, hey, I don't want to take too much of your time, Chad. I want to throw a softball question to you, and then maybe with one quick follow-up. So here's a softball question. You can tee it up and knock it out of the park. But why should somebody use a tax professional like you instead of just, man, I can jump, I can do all the forms online, figure it out myself. What's the value in making that investment into someone like you and your firm to really handle your taxes and do it well?
And I appreciate that question, man. So the biggest thing to understand is there's about 5 different ways to do a tax return correctly. Just like if I'm driving from Georgia to North Dakota, there's about 5 different ways I can go, and I'm going to get there in all 5 ways. But now inside of those 5 different correct ways to do a tax return, they're not all in your benefit. So having somebody that has knowledge, number one, they need knowledge of things that are happening on the minister and pastor side of what you all do, because it's got its own quirks and tweaks to it. And then you need somebody with business knowledge, somebody that has a lot of experience in business deductions and business returns, because that's where these things happen. And you got to go there. Nobody is teaching this. The IRS isn't sharing this stuff. You have to go research and find it. You have to take specialized continuing education to go find this stuff and learn about it. And it changes every single year. So whoever's handling your taxes, it doesn't need to be somebody that does 99% personal tax returns, because they just don't, there's no motivation or time for them to learn this business side for you or this pastor side for you. So whether it's my firm, whether it's somebody else, do not do it on your own. TurboTax is awesome to get things done, but again, that is not doing anything. It is the most conservative built way to do your taxes. It is built to file your taxes cheaply and keep you out of trouble, which means anything that can go in 2 or 3 places, it's sticking it in the most conservative place. So you don't want to do your taxes on your own for that reason. And it's probably taking you hours and hours to do and stress. So I don't recommend that. I recommend paying a professional and finding a professional that has experience in what you're doing or starting to do. Taxes aren't the same. A tax for an entrepreneur is not the same as a person that does individual taxes. You just need to make sure you're working with somebody that does research or education in those areas.
Yeah, very good. So the follow-up would be, if someone's interested in working with your firm for that, what's the best way for someone to reach out and get in touch? Where do you direct them?
Yeah, so website or email is the best for us. If you go to just pretty simple, brownmccook.com, BROWNMCCOOK.com, Brown McCook. We got a little button there, says new clients. You can make an appointment. You can email us, email Lauren, which is my wife, at brownmccook.com. We go through seasons. Like right now, for the next 4 to 5 weeks, we're not taking on any new clients. We're in deadline season right now. We want to make sure we serve the clients we have at the highest level possible. And so we onboard probably 6 to 8 months a year, and then we shut the gates for another 4 or 5 months a year, because we just want to make sure we're controlling our capacity and our quality of life and making sure we can serve at a boutique high level. And so for folks that reach out, if somebody reaches out this week, don't get discouraged if we say, hey, we're going to stick you on a waiting list. We'll reach back out in a few weeks when we open up to taking new clients. We just have certain seasons where we want to make sure we can get everything done, just like anybody else out there trying to manage their business in a sustainable way.
Fabulous. Well, we'll link to that in the show notes of this episode, and really appreciate you coming on and just sharing kind of the high-level overview. When I hear people like you talk about taxes, I actually get excited about taxes. It's like, who knew you could get excited about taxes? But it's not paying them. It's not paying them that I get excited about, right?
It is. And here is, I don't know, it's such a taboo subject. People don't like to talk about taxes. They don't like to talk about money. We've got to change that. We got to start having these conversations. There's got to be some education behind this and some excitement that, hey, money is fun. Taxes can be fun. We can use that stuff to have an impact, to make a difference, to change our lives, to change the lives of other people. pretty much everything we do in life somewhat revolves around money. And most of the stress we have in our life is around money. And so if we can simply do a couple of things to keep more of it in our pocket, that's a win, because it's not what you make, it's how much you keep or what you use in the way you want to. That's the biggest difference. And so I love this kind of stuff. I just highly encourage anybody out there, just start going down this road. I don't know that there's any single person I've ever met that said, man, I started trying some entrepreneur stuff and I didn't learn anything and I wish I'd have never started. You mostly hear people that are like, I wish I'd have done this 10 years ago.
There you go. I love it, man. Good stuff, Chad. I'm grateful for your time and grateful for you coming on and just sharing the value with our community today. We wish you all the best, man.
Same here, and grateful for what y'all are doing out there, and look forward to joining y'all more. And anytime I can be of service, let me know.
Thank you, Chad.
Well, hey, thanks for watching this episode of the EntrePastors Podcast. Make sure you hit that subscribe button so you can be notified every time we release a new episode. If you'd like to get connected to other pastors who are learning to think, act, and thrive as prosperous entrepreneurs, then we invite you to check us out on Facebook. Just search for the EntrePastors Connect group, answer a few of our simple questions there, and we'd love to include you in the conversations. And if you're really ready to go to the next level, then we invite you to join our EntrePastors membership community. When you become a monthly subscriber, you will receive access to courses, exclusive community, and coaching that will help you along in your own EntrePastors journey. If there's anything else we can do to serve you, please visit us at EntrePastors.com, and we will do our best to serve you there. God bless everybody. See you soon.